Good evening, I'm Giuseppe Basile. I'm the analyst and trader. You can find at the website www.fibstalkertrading.com. I also have a blog which I run on www.fibstalker.com. Good evening. Today is Sunday, January the 25th, 2015, and it's 10 p.m. time in Toronto, GMT minus 5, and Toronto is actually American Eastern Time, along with New York. In this video, I'm going to review for you the 12 markets I follow, and this is a review for next week, the week starting on January 26th. This is a video review I do for my subscribers every weekend. If you want to receive the video, just subscribe to my newsletter on the blog. You can find the link there. So let's start from the euro. Very important development for the euro, and as you know, I've been looking at this important 112.32 level now since a few months, and on Friday that level was broken. Very important development for the euro, which means that this whole area of potential support which was has been in place since 2008, it's now gone. There is no more interest from algorithms in trying to pick up this market at this within this area anymore. So I will, from now on, you will not see me anymore tracing this measure move here. The market is in a move lower. It doesn't mean that cannot bounce, and there is a possibility for this market to bounce as soon as it will reach the first target at this 118 sorry 108.96 level. So the best thing can happen actually in this market is that actually continues into that level, and then actually bounces into the next measure move, and that would be a great bounce and a great opportunity to get short this market if that happens, and that would be as high as 124.49, 124.50 here. So the potential scenario that I'm mentioning here could be seeing this market continuing into that first target 108, and then a multi months bounce into the next level of participation lower, and that would be 124 50, and then resuming the move lower. However, it's also possible for this market to just continue lower. Let's don't forget that Draghi might be getting serious about rebuilding the ECB balance sheet, which means continuing the LRTO program, and that would mean actually that could actually bring this price as low as below parity at 0.93, and that's something we cannot exclude. And if that would be the case, then we could see in that second scenario, we could only see a bounce after price got into that 0.93, and then again this bounce would be a 1200 bounce into 105, and then a continuation lower into 0.86. There's no reason to believe that now the dollar might not reach the lows we saw in 2000s, and apparently, the charts are suggesting a demise of the euro. That's what we're going to watch, what I'm going to follow in the coming days and weeks. So moving to the SP500, the SP500 on the other hand, it's continuing its crawling higher here, and we know that the last measure move is something that on the future here, which is what you see now on the screen. This is the continuous contract. So we have got participation from highs to highs here, and and we know that this first measure move has a target at 2095 here, and that's an extension, so could continue even higher. And if you're interested in my review for 2015 and what we have to anticipate, as well as how I do project the SP500 to 2500 by the end of 2016, you can review my premium webinar on FX Street I gave last week, and that's certainly interesting because I discuss also the major global macro factor that are affecting currencies as well as the major markets at this stage. Moving to the dollar index, of course, the dollar index, we know that, and I mentioned this now. I mentioned this now since a few months here. We have two potential levels of resistance. One would be at 99.92, basically 100, and the other one would be at 180 level here. So we are quickly approaching that level in a very extended move here. Eventually this market will correct, and we will see at which level that is going to happen. But for this I'm going to follow the euro dollar anyway, because the euro dollar, being a traded market, has much more volume and much more participation from program trading compared to the dollar index, which is actually an index, although it has futures and can be traded, but the volume of the futures is much lower. I believe it's around 300,000 contracts exchanged every day, against the 1 million plus for the euro dollar currency futures on the CME. Moving to gold, the gold has started a move higher, and for those who followed my review I did in my last premium webinar on FX Street, the dollar is moving along with the ECB balance sheet, is not moving along with the dollar balance sheet, so it's not moving against the dollar, it's moving together with the ECB balance sheet. And the fact that the dollar is started moving higher, and from a technical point of view that move higher has resumed on top of this 1230 level, the fact that this market is moving higher suggests that the ECB might get serious about buying at least 40.5 billions of debt back with the LRTO program, uh, and so we could potentially see this move higher continuing, and it's possible to time this move using the fib stalking timing, and it's not to be excluded to eventually see this market into the 1550 level in the future. Moving to US dollar versus Japanese yen, this market has bounced twice on a daily level, and it's now for the third time going back to test that level. And now we also see participation on the short side for the first time very clearly here on the daily, and so there is a potential for this market to come and test again this level, and this the third time could be actually, we don't know whether this market is going to continue lower or is going to correct higher here and again bounce from this level. But we know that the weekly is neutral at the moment, so we know that the weekly is waiting for this market at much lower levels, and that would be on the weekly would be this 112.80. So only when this market will get there, actually there is a potential for this market to continue higher. So what I'm looking for at the moment is a continuation into 112 and then a bounce, a continuation higher in that market. Moving to the euro versus Japanese yen, this market is moving lower with the euro catching up on the Japanese yen, and we knew that that would happen actually, and now this market came into one potential level of support here. We are seeing some participation here, and this would be the highs to highs. That's an extension, and we will see whether the market will react there. If the market continues lower and moves below the 61.8% level, which is below this 126.15 here, then we are going to see a potential participation at this 121.85. If you were short this market, congratulations for following the indication, and this is definitely a level where you want to get some profits off, and maybe keeping a small portion of the position and trying to bring it at 121.85. At the same time, the sequence of measure move lower here should be monitored, and the Fib stalking timing technique, which is my proprietary technique to time entry in the market, should actually be employed, and there is the possibility for this market to bounce and get into this 135.16, which would be coming from a notable anchor for a continuation lower. So that's a potential scenario there. Moving to the pound versus Japanese yen, this market is also into a larger area of potential resistance. As you can see, when the market came into this all the way halfway back from highs in 2007 to lows in 2011, there was participation on the downside. This participation is bringing price into 173.15, and once there we will see whether this market will have the power to continue higher, which would mean having a Japanese yen much weaker than the pound, and that's possible actually for a continuation higher of this market. However, if this 169.24 is pierced on the downside, then we are going to see this market potentially retesting the all the way halfway back, which is a long way down into the 153.32, and that's very possible. Moving to the euro versus Canadian dollar, you will remember that May 2000 end of May 2014, I actually mentioned the fact that this market was positioned to retest the all the way halfway back from lows to highs. That's something I mentioned now more than 7 months ago, and although the sequence of measure move failed, we had to see this market testing these levels before a potential bounce higher. And on the daily, last week we saw this strong participation, and now the market again into the level, and you're gonna see and use the Fib stalking timing technique to actually test the move higher here. If the market actually continues lower and breaches the 134.48, also for this market there is the potential to see the euro back at the lows. Moving to the pound versus the US dollar, this market has been battered and continues to be battered here, and as we could see from the weekly, this market is actually putting in jeopardy that corresponding level that we saw for the euro. So if this 149.19 is placed on the downside, the pound is going to follow the euro, and actually we could see a pound against the dollar back at this 135 level here at lows, and we are very close that could happen actually this week. Moving to the Australian dollar versus the US dollar, this market now finally got last week into this large area of support, and we will see whether the market will actually continue lower or will start bouncing and getting some sort of participation there. Remember that this market is very close to that second target, so if it continues lower, I don't see this market moving much lower than this 077.48, which is the second target. After that we will start we'll start looking at and timing extension short here, so we should see a bounce at least into this 083 level, and then we'll see whether this market will continue higher or will actually resume its move lower and will put in jeopardy the all the way halfway back here in at 0.7185. Moving to the US dollar versus Canadian dollar, this market is moving in extension very strongly here, and as you can see, um, this market never came back to test the next measured move. It's actually moving in a in a very strong vertical move here into that 126.28. That's a level that I mentioned a few weeks back. I was looking for, we're all looking for a retrace here into the next level, the next measure move. That never came, and now there is still the possibility for this market to correct. And if this market corrects before we get into the level, there will be a good opportunity to buy this market. Fortunately, like it happened in the past as well, you can see that this market can actually move very strongly moved very strongly into that all the way back there, and that's what is happening at the moment. It's not giving any opportunities to buy, but that's not a problem. Excuse me. We have to be confident, and we have to wait the right moment to buy. I always buy only these 50% levels. I don't get emotional about the market and don't try to get involved here. And we are very close to the start of that potential area of resistance, so there's no reason to get involved at this stage. Moving to the New Zealand dollar versus US dollar, this market actually also initially holding the next measure move there, and then there was participation a number of times at that measure move, but at some point on Friday that was actually pierced. Likewise for the euro. So now the new, although halfway back here, the 0.6863 is in play, and it's important to see how this is going to play out, because what we want to do now is to price discover and try to understand what this market is actually trading, because this would help us understanding the next measure move. So one of the levels we can identify is the 08274. That's one of the levels that program trading might be using at this stage. So if we get into the second target and we retrace, the next measure move is going to come from this level to lows, and that's where program trading will look for a short in this market now, 075.35, and bringing it into 068.63, which is a 12 pips move, and that's what we're looking at the moment. Moving to finally the US dollar versus the Swiss franc, not really a lot to say here. Just wanted to note that if you are following the I want to note two things here. One is that on the daily time frame, if you were following the sequence of measure move, you would have this measure move from lows to highs, which is already traced here. We got participation at this 093.59, and then it went into the first and second target, and if you traded the next measure move, you would not be into this trade if you had taken out at the second target, as I usually do. You would not be into this trade. Now what is happening at the moment is that this market is getting some sort of participation at an obvious level, which is the trace from the lows to highs here, and as you can see, there is participation and a finish trade here. So it's possible for this market to continue higher into the 109. Yes, that's possible, and that's where algorithms are likely to push this market. And this is it for this week. I hope you enjoyed this review. I wish you a very good trading week, and if you want to receive any information about the way I look at these markets and why these levels I trace are very important, you can consider, and if you want, consider joining my coaching program. I'm recruiting for the February and March session. And you can go to fibstalkertrading.com and find information about the content and how you can join the program. Thank you very much and have a great week. Bye bye now.